YouTube channel. It's your boy Ron, and in this video, I'm talking about the EA trade that I caught last night. This trade went for 132 pips. I called this trade out from my signals chat, my mentorship chat. I thought I would share with YouTube. All right, so this trade was pretty simple, pretty clear cut. If you watch my previous videos, this trade will probably make a lot of sense to you on why I took it. So let's get into the trade. So this trade was pretty much based off of bias, and what I mean by bias is I determined whether or not was I buying or selling based off the overall trend of it. So when I look at the 30-minute chart, I can obviously see that price is still very bearish. And then once I did that or confirmed that, I start to look for areas of liquidity where price could push towards. So the first obvious area that I was looking at was this low here, right? This last low right here, right? Nice area of liquidity to push towards. And then you have this low here and then this low here. So I look at the obvious wick areas where there's potential, a lot of retail traders in the market. Those are the areas that I'm looking to target as my TP. All right, areas where price would like to push towards, the algorithm would like to push towards. Okay, where are people orders located? Well, I obviously see that there's a lot of buy orders sitting here based off the strong power of the wick. Right, we know there's a lot of buy orders here. We know there's a lot of buy orders over here, and then a lot of buy orders over here. Okay, so the draw of liquidity is where's the order at? Like what makes the most sense? Okay, like why would price want to push here, back down here, right, to grab those orders, right, to take out those buyers? Okay, and also yeah, basically to take out those buyers. So go to the let me see, go to the 15-minute chart. Okay, it wasn't nothing on the 15 that I was looking at. Okay, so going back to this right here, we see the break of structure, the short-term liquidity grab right here taken, right? Small break of structure here. Now we're looking for the retracement back into the fair value gap. All right, so obviously my TP1 would have been here, and then my TP2 would have been all the way down here, or TP3. I think my TP1 was actually 40 pips away from target one. I mean, from the stop loss. So our stop loss was 19 pips. So I believe my TP1 was around 38 pips, 39 pips, something like that. But overall, this was my target 2 and then my target 3. All right. So once again, we had the easy break of structure, grab a liquidity, looking for the reversal back into here. Next thing you want to do is double check and see if this fair value gap is located inside of a premium or a discount. So what I do, I start the fit from the last buy candle up, right? The last buy candle down into the retracement. So from the swing high to the swing low. And as you can see, this fair value gap is located above the 50% equilibrium. So we can see that this fair value gap is indeed inside of a premium, right, which gives this fair value gap some confirmation, some higher probability. So now once I realize that, well, now the job is kind of already done. So now your job is kind of set the limit and just wait, right? So basically the reason why I did choose to pick the 50% of this instead of just the opening was because it was just a simple fact that I seen that like recently when I was back testing, I seen how the 50% of the fair value gaps get filled a lot, right, when I was back testing. So I kind of trying to test it out here, and it worked to perfection here. But like in some cases or most cases, I will always enter at the opening of the fair value gap 9 times out of 10. But the reason why I chose the 50% because I was trying to get more of a better stop loss. Okay, so I was trying to get a better stop loss or a tighter SL. So by me being able to move this to the 50%, it gave me a tighter SL. Even though I had the chance of missing the trade, this was a small fair value gap. So typically when you see small fair value gaps like that, they tend more so to like fill. So I was more so anticipating this to happen, kind of like a little bit of drawdown possibly and then shoot down. That's what my anticipation was. I just want to make sure that I got the best possible entry I could have got, right? So that's why I chose the 50% in this case here. But nonetheless, if you would have did this here, you would have risked an extra 5 pips, which is nothing. But I just wanted to have a tighter SL. That's just me. All right. But so let me go back, put it back to where I had it. So I had it on 945, which is my entry. All right. So this is the trade, y'all. So once again, we was bearish, right? Overall bearish order flow. Short-term low was taken, proving to me that price does indeed want to continue to go bearish. We have draws of liquidity, so we have areas where price most likely want to push towards as the objective point. So I have a bias on why price want to keep on selling, because we do have this area of liquidity that needs to be taken out. Okay, so that was like my magnet. That was a reason for price to drag lower, all right, or sell. All right, so we had to break a structure, looking for the fair value gap return. Price isn't the fair value gap is inside of our premium. Everything is great. All right, so now we press play. As we can see, price literally wicks our entry to the T, right? No drawdown here, literally wicks it. And then from there on out, throughout the whole entire, this is around right before London happened. So this was the London candle there. So that's the London open, right? Nice sub volume. And then this is all throughout London. So our TP2 got smacked here. And I think I took, when I woke up around this time, I think I closed my, I closed my position here. I was tired. The thing was I woke up and I just saw that I was up 1,300. So I'm like, let me just take that. You know what I'm saying? I didn't even really check and see what the market was doing. I just woke up and checked my phone and I just closed the position. All right. I'm like, 1,300 is cool. I'm fine. Not knowing that I had a larger target. So I could have held, right? As you can see, price did continue to rally down into our final target. So this was the full entire trade. So people in my mentorship and signals chat did hold it all the way down. Like I said, me personally, I closed out around TP2. All right, which was still a very great trade. It's still a 60 pip target. You know what I'm saying? Still 65 pips. So that was still a good trade. But overall, this trade was a beauty. It did exactly what I thought it was gonna do. And this is how the trade played out. Right, and this was EA. Right, EA. Right, beautiful, beautiful setup. So once again, like I said, I saw a bearish pressure. All right. I saw the short-term low taken out, showing us some signs of bearish momentum. Use the fib, wait for price to return to the fib FEG inside of our premium. Price comes into our premium, gives us our nice entry. And I told y'all why I chose 50%, but most of you would have did this, right? Playing it safe, right? With more experience, you'll kind of know how you want to enter these fair value gaps. But most of the time I enter at the opening, but just in this case alone, I enter at the 50%, right? So SL is just a little bit above the fair value gap. Ideally, you want to have it like here, but like I said, I wanted a tighter risk, so I just played it real close and did it like that because I trust the FVG so much that I had my SL a little tighter, all right? And like I said, that comes with experience and knowing your setup. So once again, price comes into retrace, gets a nice sell-off into our liquidity areas, and that was the final trade. All right, I could have made more money, but as I'm mad, no, I'm happy. I still closed out blue. Everything is Gucci. All right, but until then, y'all, I hope you guys enjoyed the video. And I'm gonna see you guys in the next one. So take care and enjoy the rest of your day.